Hi. Since the quarantine, stay-at-home orders, and most of our country was shut down, I've struggled with what to say to my friends, my clients, colleagues, and people who I haven't spoken to in a little while. I wanted to take time and let you guys know that one, I'm thinking of you, two, that it's going to be okay. It's a lot to process, but three, we'll move on. There's always a way to move on. If there's anything I can do to help you, please don't hesitate to ask. I'm a call, a text, or an email away, and I'll do whatever I can. Before I dive into real estate, I want to take a moment and check in to see how you're doing. I want to hear how you're coping. I've loved hearing all the different ways families are looking to bond with each other and pass the time and make it just a little bit more enjoyable, making the best of a difficult situation. Obviously, the world changed overnight, and the situation is still very dynamic. Many people have been affected in so many ways. For any of you who've lost loved ones, who've become ill, who are suffering economic troubles, or any kind of troubles at all, I'm thinking of you. I'm super grateful for all of those on the front lines helping to make a difference for so many others. If you're struggling in any way and I can do something to help, please reach out to me. I'd be honored. If you just want to say hi, I'd love that too. I know you're bombarded with news and updates daily, but here's a quick look at real estate. No doubt, real estate is very different than it was 30 days ago. It is essential here in Arizona, and it's moving, albeit slower. Buyers, sellers, investors, and anyone involved in the industry is being cautious, and rightfully so. Many transactions, projects, and goals in general are paused, but not all of them. Some people proceed. Those who are prepared are moving forward and they're finding ways to capitalize on some great opportunities. What's going on today? Well, both supply and demand are down. Low supply favors sellers, low demand favors buyers. Who's winning? Someone's got to be, right? It's not quite that simple. Homes under contract fell out of escrow, many of them. Also, the number of homes that went back on the market spiked. Today, there are more homes listed than there were a month ago, which sounds scary, but it isn't quite so bad. We'll get to that in a minute. Interest rates are lower for the most part, and buyers have more buying power. People have more time to look for homes, but unfortunately it's because fewer people have jobs. Starting with supply, remember, low supply favors sellers, high supply favors buyers. If we're just looking at Maricopa County, who's winning, proverbially, depends on what and how much. If we look back 30 to 45 days, the trend is alarming. The number of listings have increased substantially, but that's only part of the picture. If you look back, our listing counts have been declining since January of 2019. The fun starts when we dive into the what and the how much. Okay, we said listing counts are down. There's less inventory out there for everyone. But when we start to break it out by the property type, single-family homes are down 26%, which is more than overall, and condos are only down 9%. If I'm a condo buyer, let's say I'm a snowbird, I'm downsizing, I'm a first-time buyer, as the temperature gets hotter, there are fewer people looking for these homes, which means I might be able to pick up something that would not be available to me otherwise. Let's dive into how much. This chart represents listing counts by price segment. We're going to break it into three. The luxury homes, over 500, dark green. The medium range homes, middle tones, they're priced 300 to 500. And the lightest green represents affordable homes, those under 300,000. Right around mid-March, the medium tones and the light tones collapsed, but the darker green, the luxury homes, were still in abundance. After the 15th, it's more evenly spread out. Considering our median resale home is 315,000, that would fall between the light green and the dark green. That means there are more people available to buy the bulk of homes on the market. That's good. Looking at demand, March actually wasn't bad. We ended up slightly ahead of 2019, but we're behind 17 and 18. April is where things really fell apart. Now take a look at the big chart on the left. 2020 sales outpaced 2019 up until right about 30 days after the stay-at-home orders were issued. That's roughly mid-April. The analogy I keep hearing about our scenario is like if you were to take a garden hose and pinch it. When you let go of the hose, you know the water's going to flow again, but we don't know what the flow is going to look like. That's where we are with real estate today. If we're really going to get specific, luxury sellers don't have to sell. So really, many of them are holding. They didn't list their homes, they pulled them off the market, or they're waiting it out. They can. Buyers under $500,000 are taking advantage. They are moving as if there is no tomorrow. They're jumping all over opportunities where there were none before. Diving into the really affordable homes, listings under $150,000 are up. They're actually up 3.8% year over year. This doesn't happen. Let's take a look at accepted contracts plotted against listings that fell out of escrow and are back in MLS. For a while, those numbers started to track together, which is pretty bad. At some point, though, things changed. Right around the last week or so, you can see where accepted contracts actually stopped declining and started to tick upward again. On the flip side, the number of homes falling out of escrow stopped increasing and started to drop. This is good. When we heard Tina Tambor, a senior analyst at the Cromford Report, share this metric, she said it was less bad than it was. Honestly, we laughed at her. It sounded horrible. But what she said made a lot of sense. Things weren't getting worse. They were actually starting to stabilize. That's good. Okay, I'll admit, I was stringing you along a little bit. Let's get to what everybody wants to know about. In a nutshell, prices are good. They're the highest they've ever been since the Cromford Report has been recording this stat. They're well above where we were before the crash and then the Great Recession. In fact, if you go back and look at the chart, we're about where we would have been if the Great Recession had never happened at all. Home loans are completely different than they were 30 days ago. Buyers need to touch base with lenders immediately because the requirements and terms have changed a lot. Many programs now require higher down payments, have higher minimum FICO scores, lower debt ceilings, and need higher reserves. The good news is rates are down. The bad news is the total number of loan options are reduced. Today, you still have your conventional loans, those under $510,000, VA loans, and FHA loans, those that are under $331,760 for single family. That's actually just above the median resale, and good. Jumbo loans, whole different story. These are the loans outside of the conforming loan limit. These programs with down payments under 20% are gone. If you don't have 20% to put down on a luxury home, you may be out of luck for a while. On February 26th, a Wells Fargo lender sent me his rate sheet. He sends it all the time. I had 8 options then, 5 conforming, 3 jumbo, varying types and terms. On April 6th, there were only 6, 3 conforming, 3 jumbo. Difference was the conforming loans were down about 0.5 point, the jumbo up by about 1/8 of a point. When all of this started, I had $1 million home in escrow. About 2 days before we were supposed to close, we got a call from the buyer's lender saying their financing was denied. It wasn't because they had an issue, the loan program no longer existed. That was really disappointing. Assuming you've got good employment and credit history, you're looking at about 3.25% for conventional loans. This is Axel Mortgage. Go to them specifically for their terms. I can show you the way. On VA, if you have a VA entitlement, 0 down, this is a 0 down loan, 3.25% to 3 5/8, which is pretty darn good. The FICO score is a minimum of 660 on about a 650 loan amount. Jumbo, with 20% down, you're looking at 3 5/8. That's where they were at about fall of 2016. Looking at the market overall, I'm going to go directly to the Cromford Market Index. It's a factor of supply and demand in the greater sense of real estate. Looking at the last 6 months, yes, it looks horrible. Fell off a cliff. Today, if we look at the market index, it's 153. Balance is going to be somewhere between 90 and 110. We're still way above that. If we compare it to the last 2 decades since Cromford has been around, we are well ahead of where normal should be. Looking at the market by area, we're going to see a dramatically different picture emerge depending on where in the valley we are. Avondale, Glendale, Gilbert, all areas substantially down. But down from what? 460? 300? It's all still hot. Real estate is moving. On the flip end, Paradise Valley is almost at balance. They're losing the seller's advantage, or close to it. The East and West Valley are still very much so doing well. The Northeast Valley is slowing down. How much? We'll see. How do we do real estate now? Well, it's actually the same as it was before. Everything is different, but the way we approach it is exactly the same. You define your goal, you prepare accordingly, and then proceed cautiously. Know whether you're buying, selling, leasing, or a combination of all. It might mean you're getting your finances in order, pre-qualifying with a lender, preparing your home to be show ready, and having a lot of people come in and out of your house. You might plan for what comes next after the transaction. When you're ready to go, before you start, know your market. Know what's applicable to you and not anyone else. There are so many new tools and plenty of old ones available to us to help get homes sold. Either way, prepare for your needs. If you're a person that has high-risk health, it might mean you need gloves, masks, and other things on hand to keep yourself safe. If you're low risk, a good hand washing might do the job. Okay, pop quiz. If you're paying attention, who will benefit today from our market? If you recall, it was people buying condos, luxury home buyers, buyers in Paradise Valley, and sellers in the Southeast and West Valley. Beyond that, homes in good shape, priced well, and in good locations sell in any market. Here's what residential real estate looks like in the year 2020, the new normal. I think the look on my face just about sums it up. Even though Arizona still has another 2 weeks to go before the stay-at-home orders are officially lifted, you're probably tired of homeschooling, working at home with your significant other or some other house guest you didn't expect in the next room 24 hours a day. That said, if you still have the means and the will for a real estate transaction, there is a way forward. Hopefully you learned something from this. Thanks for hanging in there all this time. I'm sure you are sick of Zoom, Microsoft Meeting, FaceTime, and all the other apps that we've now become very reliant upon. If there's something I missed, let me know and I'll be glad to get it to you as quickly as I can. Look forward to seeing you again soon on the other side. We are almost there.